Daily Rates Live with the Mortgage Calculator. Today we're going to go through some live mortgage rates, and then we're going to do a deep dive into a loan topic here. Give us just a moment to go live on all the different platforms here. We are streaming on YouTube, Facebook, and LinkedIn. So give us just a moment to go live on all the different platforms here. We did put the chat up on the screen, so feel free to drop a comment there in the chat. We appreciate all the comments. And we'll wait just a moment to go live here. Now, even after we start, feel free to keep dropping comments in there. We appreciate it. And also feel free to drop any questions that you may have there in the chat as well about the deep dive topic that we're going to do today. We're more than happy to answer any questions that anyone has. But it looks like we are live on all the different platforms, so we can go ahead and get started. Again, feel free to drop any questions you have there in the chat. But for now, we'll go ahead and take the chat off the screen and get started. Welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every morning on this show is go through some live mortgage rates, and then we do a deep dive into a different topic. Today's topic is going to be hard money loans. So our sales manager, Jose, with 28 years of experience as a loan officer and a realtor, is going to do a deep dive into hard money loans for us. But before we do that, let's do what we do every morning, which is go ahead and pull up our pricing tool and see what the rates are looking like this morning. So if you're ready, Nick, let's go ahead and pull that up and see what the market is doing today.
All right, let me switch my screen and we'll check it out. So this is our pricing tool. This is going to show us the general rates and the APR for today. It is September 14th, just after 11 a.m. Eastern, so all of our general programs are live. If you would like a full breakdown of all the costs that go into the APR that we're about to see here, a full loan estimate, please get with our team. We have over 400 licensed loan officers in 24 states for primary homes, and we can do our business purpose investor loans and hard money loans, which is a topic for today, in 44 states. So for this demo here, we will set up the same scenario and compare across programs. So we'll set up a $400,000 loan amount for all our demos. We'll set an LTV of 80% loan, 20% down payment. We'll set the desired price to 99. That means we're going to ask the computer to find the best rate at one discount point in cost. And we'll compare our programs. We'll check out conforming conventional first, as we do every day. Then we'll check out FHA. And then we'll look at expanded guidelines, also known as non-QM, where we have over 5,000 additional options beyond what you see here. We also offer VA and USDA. VA is only for our eligible active service members and vets. If you are eligible, let us know. We can quote it. And USDA is only for eligible properties. If you do happen to be shopping there, let us know. We can quote it, no problem. We'll start with conforming conventional. We'll do purchase, 30-year fix for all the demos, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated FICO credit score of 760 and an estimated debt-to-income ratio of 40%. So with these settings, let's see what the conventional rates are doing this morning. Woohoo! Went down finally. Great. We love when the rates go down. So 7.125 for one discount point in cost puts our final APR at 7.292. Remember, yesterday we were over 7.5 on the APR. So we definitely found some good downward momentum yesterday. So that's great. Definitely, if you're looking to lock something in, today may be a good day. Now, if our customer doesn't qualify for conventional, typically the next option we want to look at, keep everything exactly the same, is an FHA option. FHA does allow a little more leniency on credit issues, as well as a much higher debt-to-income ratio limit that we can use. So this is typically the next option if a customer doesn't qualify for conventional. And FHA is about the same as it was yesterday, not much movement here. Looks like this is a touch cheaper. 6.49 rate instead of 6.5 for one discount point and cost puts the APR at 7.082. 6.5 rate at 0.875 cost puts the APR at 7.088. So just a touch different there. Both are great options. Remember, FHA does include a upfront mortgage insurance and yearly mortgage insurance. So that is included here in the APR. That way we can compare across the programs. So for our customers that qualify for conventional and FHA, you can see FHA is actually a touch cheaper in this example. So definitely check it out. Now, where we love to help our customers is if they do not qualify for either program. That's where many other banks and lenders just deny a loan and have no other options. But that's where we love to come in and solve our borrowers' problems with our 5,000 non-QM programs here under expanded guidelines. So we will keep everything else exactly the same. However, a new option pops up here where we can choose a different income option when we choose non-QM. So full doc is what we use for FHA and conventional. That's 2 years of tax returns, what most people are used to. So we usually choose non-QM to use one of these alternatives. We have asset-related programs, business bank statement programs, investor programs. We have our personal bank statement 12-month, which is what we use for our demo. That's the most popular one by far. We have RSU, stated, VOE, 1099, P&L, no income, CDFI, all kinds of options. For the demo, we always use the 12-month personal bank statement, the most popular option for our self-employed borrowers. Many times our self-employed borrowers, when they submit 2 years of tax returns, may have various write-offs or things that may cause them to not qualify at all, or maybe just a little short on the income using the tax return method. So we solve that problem by using no tax returns at all. We simply use their last 12 bank statements and determine a debt-to-income ratio of 40% in this example, using just their cash in the bank. So many times our self-employed borrowers will qualify for double or triple the income using these methods. So let's see what the bank statement options are this morning. About the same as it was yesterday. 7.5 rate, 2.125 discount points in cost for 7.604 APR. So remember, conventional was at 7.2 and change today. So conventional went down a little bit here. Non-QM bank statement stayed right about the same. So we beat them a couple days in the last week, but now conventional's a little bit lower. Great option though for our borrowers that need to use the alternative income. So almost identical price here for non-QM. And you'll see some of these options here at a little bit higher rates and cost may allow us to get around other guideline issues. Not only can we use alternative income with bank statements, but some of these programs may allow us to have a bankruptcy or a foreclosure or other issues that would cause us to not qualify at all. So please get with our team members. They'll find which of these hundreds of programs will work best for you. Now, before we go into Jose's example, we always do our live rates for investment property. So our final two demos here, we'll set the occupancy to investment. We'll set the LTV to 80% loan to value, 20% down payment, just like all our other demos. And we'll compare our investment property options. So we have our conforming conventional options and our non-QM options. Remember, the government programs, FHA, VA, USDA, do not work for investments. So we'll start with conforming conventional. All we've changed here is the occupancy to investment. Everything else is exactly the same. So we will see what adjustments the conventional rates have added to investment properties. Best option here at the top, 7.625 rate, 2.875 discount points and cost, puts our final APR at 7.854. So this is a good option for our customers that qualify conventional, but most investors that are asking for quotes typically want to look at some other options where the discount points aren't as much. 2.875 discount points in this example, better than it has been for the last few weeks, of course, but $11,500 is still a lot of money that most investors would rather spend elsewhere. So unfortunately, with conventional, there are no higher rate options with lower discount points just because of the way the rates are right now. So we love to present our non-QM options to solve that problem. So for the final demo, we'll do investment property, 80 LTV again. Sorry, I can't click that. And we'll choose expanded guidelines, aka non-QM. And the first thing we need to select is our income option. So when we're doing investment properties, the most popular income option is the investor options here for DSCR, only for investment properties. That's because it doesn't actually require any income or employment from our borrower. We simply use the estimated rental income from the property to determine a DSCR value. It stands for debt service coverage ratio. If the estimated rents can cover the PITIA of the mortgage, aka the property cash flows on a monthly basis, that's a ratio of 1.00 or higher. We have options for ratios under 1.00, aka the property doesn't cash flow. But for the demo, we will put 1.5 as the highest value so we can see all the options pop up. And prepayment penalty is standard for a non-QM investment property. We always choose 3 years for the demo as the most common. We can choose 0, which will cost more and limit the loan programs that show up. And same with 5 years, that will save our customers some money, but not all the loan programs allow it, so they won't all show. So we can see the most common options. We will choose 3 years always for our demo, so we can see all the best options pop up. So let's check out the DSCR rates this morning. Best option here at the top, 7.99 rate, 0.725 discount points and costs for a final APR of 8.047. So remember, conventional was 7.8 in change. Here we have a non-QM DSCR option for just about 0.2 higher in cost. So most of our investors, typically about 90+%, when they're presented with these two options, they either can do a very expensive option for almost identical price, or here a slightly higher rate for $2,900 in cost compared to the conventional was $11,000+ in cost. So I'd say 90+% of investors choose a DSCR program for the ease and flexibility. And as we scroll down here on this list, you see there's a ton of different options. Some of these are a little higher rate and costs, may allow us to get around other issues as well, like bankruptcies and foreclosures. And very popular requests, some of these may allow short-term rental income. Very popular requests these days for our investors. So tons of different options here. Please get with our team. They will find the best one for you. Now, let me switch my screen and we'll get into today's topic. So today we'll be talking about hard money loans, obviously different than DSCR. We just presented some commercial DSCR, basically options. But a hard money loan is probably more what people consider when they are talking about investor loans. The traditional hard money loan that is not a DSCR loan. It is typically for investors only as an alternative to cash financing for properties that would otherwise not be eligible for what we just went over, which is the DSCR long-term financing. So this is similar to fix and flip. I guess I'll let Jose explain the subtleties here. So similar to fix and flip, most fix and flip is technically a hard money option because we're lending based on the asset, right? Not based on the income or any other personal income or tax returns or anything like that. We're saying, does this property make sense? Can we lend on this property based on the values of this property? So that's kind of the definition there of the hard money. It's asset-based lending, doesn't have anything to do with income of any kind, and is very similar to the fix and flip, but obviously more general category than the fix and flip because it doesn't have to include rehab technically. So Jose, if you're ready for some examples, let's go ahead and check it out. Oh no, did he get frozen again? Every time we talk about fix and flip, this guy gets frozen, huh?
I don't know if he's going to come back.
He was moving just a second ago. Well, as I mentioned, I guess I'll try to do Jose's intro here for the hard money part. So again, hard money, asset-based lending, not based on income, not based on tax returns, not based on the borrower's income. We're simply going to be looking at the property. Does this property make sense at this, LTV essentially is really the number that makes the most sense for a hard money loan. We have to kick Jose out. Let me try to kick him out real quick. We can bring him back. Nope.
Still frozen. There he is.
All right, can you hear me now? So sorry, I don't know what happened there. All right,
Yeah, you're
guys.
good. Yeah,
Okay,
you're good.
awesome. Okay, so sorry about that. Little technical glitch there. All right, so talking about hard money, it's ironic because our flagship program is DSCR, where we're usually refinancing the investors out of hard money into the DSCR because there are some similarities between hard money and DSCR, mainly no personal employment required, nor income verification required from the borrower in a true hard money loan. Now, there are some hard money hybrids out there where they may ask for FICO scores. I guess that would be more like a institutional hard money. They may offer a little bit better terms, do a little bit of vetting, but the true hard money is just asset based, strictly looking at the equity. One other thing that I will state about hard money is that it is primarily for investment properties only. I say primarily because in California there are some options where there are owner occupied hard money lenders out there. I don't know what it is that they're doing to circumvent the Dodd Frank Act, but hard money loans should be considered for investment properties only. There are hard money is used for a variety of things. You could do just purchasing a property that has issues, maybe some title issues, some condition issues, um, because they are more flexible in what they will accept because basically they can create their own terms, right? They don't have to worry about meeting any guidelines for anybody who they're going to sell their loan to because normally they're lending their own money. Hard money can also be used for some things like foreclosure bailouts, right? There are some hard money lenders that will allow foreclosure bailouts, obviously at a reduced interest rate for investment properties only. Again, so let me share some of my hard money options with you. Um, Here we have a hard money purchase. This is pretty high LTV. This is one of our outlets that we have for hard money that does offer up to 70% LTV. Many times, hard money will be lower than that. You hear a lot of hard money options maxing out at 60 to 65% LTV. So getting one at 70% LTV is very good. This one here, you're looking at 11.75% on the rate. And you're looking at, I believe here, this was 3.5 points for that rate. Um, excuse me. So,
And it says there that was 1 unit, no credit. I can barely read it there.
yes,
Can you read that?
right. 1 unit property, no credit score, nor income verification required, 12 to 24-month term.
Great. Okay.
Now, I guess talking about terms, one of the things there to note is prepayment penalties. Some hard money lenders charge them, some don't. Some may tell you, maybe 6 months because they don't want you to pay it off right away. And some will tell you no prepay. But usually that's going to be a combination of upfront fees as well. Uh, if you're not going to have some when they don't have a prepayment penalty, they'll just charge you more upfront. Some, if they do, will charge you less. So it's all part of the negotiation. Because one other thing to note with hard money, it being asset based, it's all about the property. It's all about how they feel about the property. So they don't usually do a full blown appraisal on a property. They'll do their own version of a BPO, broker's price opinion, and then depending on what they see is what they're going to offer you. So the max is 70%, but they could in some cases reduce the interest rate or reduce the LTV or a combination of both if they do not like something about the property. So in this scenario, this would be for a purchase. Now we do have hard money cash out options, and again, uh, the cash out option has a half a point higher fee Similar rates. The rate is mainly going to be based on what I just mentioned, risk that they see associated with the property itself. So this is what they typically would offer as the rate, but could be a little bit higher if they feel something they don't like about the property. And again, but you will note that the max LTV, same as with the purchase, is 70%. Now, we do have hard money second mortgages as well. Now, they do have an additional half a point additional fee. Now, that fee could be even higher. Again, risk based. Rates that they're publishing is 12.875, but that could also vary, again, depending on risk. If there's something they don't like about the property, or anything they don't like about the deal that they feel is increased rate, increased risk, excuse me, that will be reflected in the rate. So, as my final option here, this is a very interesting product now. This is a hard money loan, a short term loan. That's what I mean there by hard money, short term listed property loan. So, if you have a property that's listed for sale and the seller wants to cash in his chips before the property actually sells, this would be basically a very short-term bridge loan where possibly the seller already wants to purchase something else. You can get this loan. It's anywhere from a 3 to 6 month term on this loan, and you're looking at pretty good rates here. You're looking at 9.95%. Again, the cost a little bit higher, could be anywhere from 4 to 4.5 points in the cost, but you do get a very good rate. Now, the rate again could be anywhere from 9.95 to the low 12s, again, depending on the whole deal when they're looking at the property that you're selling, how they feel about your marketing, your sales price, all of those factors come into play, and how soon they feel the property is going to sell, and if it's going to sell for what what you're asking, all that kind of good stuff, then they'll set the risk. But you're looking at rate of around 9.95% for this pretty amazing product to get the money while a property is listed for sale.
All right.
Just to be clear, no loans are allowed on other types of loans. There are no other loans allowed for properties that are listed. We don't have a single loan that is possible for a property that's listed for sale, as far as I know. Not a DSCR, no conventional. Any other options, Jose, for anything that's listed?
Not anything, that would not be like this. Nothing
Exactly.
out there of the lower rate type options. But when you're looking at a 9.95% rate on a hard money up to 70%, actually, one thing I forgot to mention, this loan goes up to 80% loan to value. So it does go up to 80% loan to value on this loan. So very good option there in that respect as well.
All right. Let's check out these questions. Warren's asking if it will show up on borrower's credit. Is it non-recourse?
Hard money loans generally do not show up on borrowers' credit reports.
But it all depends.
Yeah, right. But usually fine when we're doing the loans, the investor that has the hard money loan on a property, and most of the times you have to get a verification of mortgage, payment history, all that kind of stuff, because the loans don't appear on the borrower's credit, usually.
And Christina asking, is a hard money loan similar as fix and flip in the way it's distributed in stages? Is there a draw or anything?
Well, if you're looking at a regular hard money loan, it's not. I mean, even if you're buying a property that has condition related issues, that they may be adjusting their LTV and the interest rate for that, but still lending you the money. A lot of that is going to depend on the borrower's experience as an investor as well. However, if you get a hard money loan that is a fixed flip loan, they will control the distribution of the money the same as any other fixed flip loan will.
Remember, hard money is the general category. Fix and flip is a subcategory of a type of hard money that would include the rehab, right? So if we're talking about the general, you're talking a little bit more specific, and that definitely is a type for sure. And Angela asking if we have any hard money programs for refinance. You must have tuned in late there, Angela, because 2 of the 3 options Jose presented were refinances. So only 1 purchase. There was 2 refinance options. So just run this back, and you can check those out.
On the refi options, they do offer up to the same LTV as a purchase, but usually you're going to find that unless it's an extremely amazing property, it's usually going to be 5% lower LTV on the refis than on the purchase.
All right, we got more questions rolling in. Good deal. Angela's asking about commercial properties. So typically commercial is technically an asset-based loan, right? So this is a traditionally used for commercial as well. But I guess, Jose, you could probably define the differences there a little bit.
No, we can definitely do commercial hard money loans. That's not going to be an issue. There's just going to be different parameters. Could be a little bit lower LTV, but again, it's going to be in that case there may be a little bit of investor experience required if it is. But and again, it's going to vary from hard money lender to hard money lender. For example, the one that I was using to get these rates doesn't like doing any specialty properties, right? So they're saying they don't want to do anything that's auto, cannabis, assisted living, no hotels, no special purpose, which would be no restaurants, no churches, schools, strip clubs. They also don't lend on land, this particular option. But then that's the beautiful thing about the hard money world is that they create their own guidelines to whatever they want to do. So you could just look around and you're pretty apt to be able to find a conduit that will offer it. Just depends at that point on how high of a rate does your borrower want to pay.
And remember, we did commercial properties 2 episodes ago, so you can check those out. But obviously, all the best rates and terms that Jose was presenting were, for example, SBA, which is a full doc, even beyond full doc, right? You have to get approved by the government, which is a whole nother, federal background check level. So a lot of documentation to get the lower rates, but there's plenty of commercial hard money options for much higher rates. But obviously, I don't think you presented any hard money commercial when we did the commercial, right, Jose? Those were all the best programs. Correct. That have some documentation. Man, we got a lot of questions. Great. So A. Smith asking, no experience. Okay.
For a regular hard money loan, now I did mention for a commercial type hard money loan, when you're talking about something, $1 to $5 million, they may vet you as to your investment experience. But for a regular hard money loan, like a residential, even if it's residential investment, they're not going to be looking at any type of investor experience or prior home ownership experience or anything like that. They're just strictly going to vet the deal based on the quality of the asset and the equity of the asset.
All right, another question. Harriet asking, Oxford House, rooms rented for recovery, so assisted living, but more so for, I guess, drug rehab type things, I guess it sounds like.
Right. At this point, it really depends how they view what this actually is, because at this point, you're looking at looks like a commercial property, commercial venture. This looks like a business assisted living facility for people going through a recovery program. It doesn't look like a traditional residential rental type of a scenario. So you're gonna run into the same obstacles that we do when we have somebody with a single family home that's being used as an assisted living facility. You're gonna find that 99% of the conduits out there on the residential side don't want to touch that because they view that as a pure commercial endeavor. So that's really what you got to be aware of here is that when you are emailing and calling around to size up your deal, you got to be very specific about what you're off, the property actually is, so that they can, not waste your time, and let you know exactly what they can do. But again,
Sounds like an ALF, right? I would look
yeah,
at the hard monies that offer ALF and say, hey, this is the specific type of ALF that I'm presenting here.
right. For the conduit that I used to obtain these rates for today, they specifically state in their brochures there that they don't handle. They put rarely do they do any ALFs.
So that would not be an outlet I would look for this deal, but there are some that do ALFs, right?
Yeah,
So
correct.
just look at their terms, and should get some action. I've done a loan on a rooming house too before, so you can sometimes get rooming houses to work, but that's a commercial rooming house, right? So rooming house different than ALF recovery rooming house, right? That's a commercial rooming house. I've done a student housing before, right, where there's student housing rooming house where it's just rented by the room, which then you can do more of a normal loan there. So, like Jose said, you make sure it's that if it's full commercial, you go the full commercial route there. All right, I think we're done with the questions here, Kyle.
All right, perfect. Well, you all know we do this show 11 a.m. Eastern every single weekday. We will be back here tomorrow with a new topic. This was a great topic, and thank you so much, everybody, for all the questions. We appreciate you tuning in. Thank you, Nick. Thank you, Jose. And we'll see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Everyone have a great day.
Thanks, everybody.